Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we are going to be looking at the weekly Forex forecast for the coming week. If you're new to the channel and wish to be staying updated with our weekly Forex forecast, you can do well to subscribe to the YouTube channel and also join the free Telegram community where you can have access to chart analysis. So this is actually the DXY. So you can see this is our weekly time frame, and we've been expecting to see downward move of price to this weekly unmitigated fair value gap. And as you can see, we're still seeing the bearish momentum of price to the downside, where we are still expecting to see further bearish momentum of price to the downside to fill up this unmitigated fair value gap. And you can see we have this sell side liquidity. So there is the possibility that price is going to actually fill up the unmitigated fair value gap, and then we see price being drawn to this sell side liquidity. But for this coming week, we are actually looking at seeing price actually trade through this candle low points into the unmitigated weekly fair value gap. But our expectation before we would see that price drops further to the downside is to see the possibility of price pulling back to the 102.651 price level before we have the continuation of price to the downside. If you guys could vividly remember, we actually have been expecting that, when we actually saw this candle, we expected to see price return to the weekly inverse fair value gap, but price actually mitigated just the very low point of the weekly inverse fair value gap without really going into the main threshold and then giving us the bearish move to the downside. So what we see, or what we saw previous week, is that price actually returned. We have the mitigation of the low of the inverse fair value gap, and then price pushed to the downside. So we were still expecting the possibility last week of price possibly pushing to the upside to reach the high and then fall to the downside. But then we can see price fell. So last week is still within the last previous week candle. So we are still seeing a bearish candlestick to the downside. So we should still expect to see the possibility of price still pushing to the downside. But we want to see the possibility of price pulling to the upside, and then we see the push to the downside. When we drop to a lower time frame, you're going to have an understanding of the 102.651 price level. So let's go to the daily time frame. So here in the daily time frame, what we can see is this is actually our weekly inverse fair value gap, and you can see we have the daily fair value gap here. Price actually returned into the daily fair value gap, and then you can see we have the drop of price to the downside. Now price returned to the upside, and now we are seeing that price is pushing to the downside. So you can see Friday actually gave us a bearish momentum candle to the downside. And we can regard this as a mitigation block because this sponsored the move, but price did not raid this buy side liquidity. Price did not raid this high points. So you can see we have the push of price, a bullish push of price to the upside, and then price returning to the downside. If you can remember, in the daily time frame, we have this fair value gap. Price broke through the fair value gap, return, price came down. Now price returned into the fair value gap as an inverse fair value gap now, and we can see the momentum movement of price to the downside. So I'll be expecting to see that price would give us a ride because we have this order block has been formed here. So we could see price push to the upside, mitigate the order block, and then we have the fall of price to the downside. So we want to see for the push of price to raid this swing low, mitigate the weekly unmitigated fair value gap before we could start framing the possibility of price being drawn to this sell side liquidity. So this is what we are expecting to see in the DXY, except price otherwise change direction, and then we see price returning to the weekly inverse fair value gap. So let's check the 4-hour time frame. So this is actually the 4-hour time frame. So you can see price failed to push further to the upside to raid this high points. We have this push up price to the downside, price return, fill up the displacement, and now we are having price giving us displacement to the downside. So you can see we have this down close candle that sponsored this bullish move to the upside, but then price did not read this buy side's liquidity. So we have this as a mitigation block. And then you can see that the mitigation block here is in confluence with this fair value gap. So we could see price return to this level. And then we have the fall of price to the downside into the weekly fair value gap. So we want to see price action within the weekly fair value gap before we could actually frame any bullish move of price to the upside. But then price is actually bearish in the dollar index. So price is actually being drawn to the fair value gap and also this sell side liquidity resting here. So this is what we have to understand about the dollar index. So let's check out the EURUSD, the GBPUSD, and then our gold pair, and then we'll also look at the USDJPY. This is the EURUSD pair. So, we actually expected to see price keeps the bullish move to the upside. We saw the rate of this internal range liquidity last week. So this is actually our drawn liquidity target that we're looking at in the EURUSD pair. And don't forget, this is the weekly time frame. So, we actually, the last 2 weeks, we saw this fair value gap. And we actually expected the reaction of price at this fair value gap to give us a bearish move to the downside after price rate this internal range liquidity. And you can see price gave us the bearish move. And then for last week, we expected to see bullish move because this is actually our drawn liquidity price zone or level. So now what we can see is that price has already filled up this weekly fair value gap. Price is reacting at this rejection block. So we could see the possibility of price actually pulling back to the downside into this weekly fair value gap, which is going to act as an inverse fair value gap before we see the push of price to the upside, where price is actually going to be drawn to the buy side liquidity. So let's check out the daily time frame. So here in the daily time frame, what we can see is, you can see this is actually the weekly fair value gap level. You can see we have a fair value gap in the daily time frame. And then we have the buy side liquidity resting above here. So what we can see, we have the rate of internal range liquidity. And then now we are seeing that price gave us this down close candle. But now we have an up close candle on Friday. So price created an order block within this fair value gap zone. So we could see price open and then price drops to the downside and continues the up movement to the upside. Because what we can see is that price actually gave us this bullish candle. Price returned to the downside first into this fair value gap here. So you can see we have the return of price into this fair value gap. Price close above the consequent encroachment. And then we're having this engulfing candle here. So we could see price next week return to retest the fair value gap in the weekly time frame, this zone, which is now an inverse fair value gap. And then we see price continues the bullish move to the upside. Except otherwise, then we would expect to possibly see price falls to the downside to this particular zone, which we've been expecting to see price fall to, but price have not yet returned to this level to give us a bullish move to the upside. So guys, it is either we see that price return, retest this inverse fair value gap, because we have order block form at that zone. We have the displacement. Price return was rebooked by the fair value gap, and then price is giving us the possibility of bullish move to the upside. So we could see that return, and then we have the bullish ride of price to the upside. Let's check the 4-hour time frame. So we can see in the 4-hour time frame, we can see price return into the 4-hour fair value gap. And now we're seeing price pushing to the upside. So we can see that price broke through this swing high points. You can see we have this fair value gap here because price gave us this expansive movement to the downside. The possibility was to see possibly price return, fill up this fair value gap and push to the downside. But then price pushed to the upside, closed above the fair value gap. So we could see reclaim of price, and then we see price push to the upside. So in the 4-hour time frame, we could see price raid this buy side liquidity before we could have that return, and then price continues moving to the upside. So just the way I've told you guys, except proven otherwise, then we could see price return to this level. So guys, this is GBPUSD. This is a weekly time frame. You can see we have this bullish engulfing candle to the upside. We are seeing that price is being drawn to this buy side liquidity. So that is why I said, except proven otherwise in the EURUSD, before we could see any bearish movements to the expected zone, we actually expected to see price drop to before we could take a bullish ride. So based on what we're seeing, based on the positive correlation of the EURUSD and the GBPUSD, then we should actually still be expecting bullish movement of price to the upside to raid buy side liquidity, which we've identified in the EURUSD, and you can see here in the GBPUSD, we've identified the buy side liquidity here. So what we saw last week is this bullish movement, which we actually made our focus of. So guys, for the coming week, we are still expecting to see more bullish movement of price to the upside, aiming for this first buy side liquidity before we have an extension to this buy side liquidity. You can see price gave us this displacement, price return, fill up this fair value gap, this inefficiency, and then we're having the bullish movement of price to the upside. So let's check out the daily time frame. So here in the daily time frame, what we can see is that we're seeing the push of price to the upside. We're seeing that price left this fair value gap. Here we have the sweep of this liquidity, and then we have bearish movement to the downside. Price gave us this displacement to the upside. We have price return into the displacement. We have this bearish movement to the downside, and then price gave us a bullish ride to the upside. So we could see price for the push and then reaction at this daily fair value gap. So we could see the possibility that price may fall to the downside to this price level, which is actually 1.28923 price level, and then we see the continuation to the upside to reach the buy side liquidity. Or we could just see price give us an expansive movement to the upside to reach the buy side liquidity. But due to this daily fair value gap, we should possibly expect resistance where price would actually drop to the downside before we have the bullish ride to the upside. So let's check the 4-hour time frame. So here in the 4-hour time frame, we can see clearly that the 4-hour fair value gap is also in confluence to the daily fair value gap, and we also have an inverse fair value gap also. You can see price took out this liquidity push. So we could see that price would face resistance at this price level, drop to the downside. Either price reacts at this price level, or we could see price dip lower a little to this zone where price broke through, and then we see bullish movements to the upside. So guys, this is actually gold. This is weekly time frame. So gold has actually been bullish. And last week I told us that we saw price reacting at this order block, so we should still expect bullish movement of price to the upside to rate this buy side liquidity. Now we have a run on this liquidity, so we can see we have this bullish expansive candle to the upside. So we want to see what price is going to do on Monday, the candle that opened, before we determine how deep price will fall to the downside before we have the bullish move of price further to the upside. So let's check out the daily time frame. So here in the daily time frame, what we can see is we have that buy side liquidity rate. So we can see that now price gave us this bullish expansive candle to the upside. So we want to see the possibility that price may return to the downside to retest this violated high point, and then we have further push of price to the upside. So we cannot determine the bearish push of price to the downside because this is actually a new high that gold have actually created. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can see is that price gave us this strong order block zone, this supply zone, because we can see price return was rejected to the downside, price return was rejected. So this zone may reclaim price to the downside, and then we could see price possibly fall further into this fair value gap, which is in confluence with this order block that was violated to the upside. So we could see price dip to the downside, and then we see price push further to the upside. So there's still the possibility of expecting further bullish movement of price in gold for the coming week. So this is all I have to show us, guys, in the gold pair. This is just a very quick one. And then let's check out the USDJPY. This is the weekly time frame in the USDJPY. So we can see price return into this weekly inverse fair value gap, though price did not mitigate the mean threshold, and then we are seeing that price close to the downside. So now what we are going to see is that we are still expecting then to see that price is being drawn to the sell side liquidity. We want to see price for the push to the downside and then rate this sell side liquidity. So that is what we are expecting to further see in the USDJPY. So the USDJPY is still bearish. So let's check the daily time frame. So this is actually our daily time frame. So you can see the inverse fair value gap in the weekly time frame we marked out. So we can see price return mitigated. Now we have this bearish candle closing to the downside, even beyond the main threshold of this bullish candle. So we could actually see next week further bearish movement to the downside to actually rate this sell side liquidity. So let's check the 4-hour time frame. So this is the 4-hour time frame. Now what we can see is that price is reacting at this order flow because we have this buy move before the sell move to the downside. Price pushed to the upside, took out this relatively high points. Now we can see prices falling to the downside. So this is the only zone we could look out for to see the possibility that price may push to the upside. But then we're seeing price reacting at this inverse fair value gap in confluence to this order flow. Price took out all these relatively equal highs. So we could just see price drop to the downside to actually take out this sell side liquidity, and in extension take out this sell side liquidity. So this is just a very quick one, guys, because actually I have a busy schedule, but I just said let me make this weekly forecast available for the subscribers. We do not want to skip any of our weekly forecasts for now. So guys, cheers, God bless you till I see you guys next week.